please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
As always, banks are the center of a lot of conversation, whether it is NPAs and their resolution through the bankruptcy process, whether promoters can buy back their own assets, or whether it is the revamp and restructuring of public sector banks. Banking is in the eye of a storm, as always. And I have with me someone who has seen the banking sector through several cycles of upturns and downturns. Dr. Rangarajan, former Governor, Reserve Bank of India. Dr. Rangarajan, thank you very much for joining me. Well, the Finance Minister has clearly said that recapitalization will come with reform. According to you, what should be the one or two things that should definitely be part of reform while recapitalizing public sector banks?
In a sense that the public sector banks have run into these problems because of the failure to conform to certain standards or prescriptions. Therefore, if you are trying to bail out or if you are trying to help the commercial banks, then this help should go hand in hand with what we consider to be the most important things that can be done to prevent such crises happening again. Therefore, one of the important things that we really need to focus on is what do we do about the organizational structure of the banks. The way in which we look at the public sector banks and how many should be there and how many should be merged with others. And then, of course, there is the overall question about how are the public sector banks managed. I think these are two sets of issues which we should address.
Okay.
One, looking at the size and the number of banks. Second, looking at the way in which the public sector banks should be managed.
But which should be first at this juncture, sir? Because we have a large number of banks where the NPA percentage is above 10%. There are only a few which are even below 10%, and even they are above 5% in terms of NPA as a percentage of total loans. At such a time, can we wait for mergers for reform, or should it be structural reform first and then mergers?
I think I would say structural reforms first.
Okay.
Because I believe that even the merging would be a difficult task,
yes,
unless we have undertaken some reforms in the which are of a fundamental nature.
Okay.
Actually, merger and acquisitions are a common feature even in a well-organized banking system.
That's true.
It happens whenever one institution feels a need to merge or one institution feels a need to acquire. Therefore, that can happen in the normal course. But in our situation, the normal course essentially means that government also taking the initiative. Okay. But I think structural reforms which are needed must be undertaken to first before merging, but it need not rule out mergers at all.
Okay.
If there are some institutions which feel the need and so on, let them do it. But any major reorganization of the banking system itself in terms of the number, size and all that can wait till we have resolved the NPA issue and also resolved how banks will be managed.
Okay. Well, what do you mean by structural reform first? What should be the most crucial reform?
I think the management of the banks is a critical issue. I think even though certain things were laid out earlier, saying that we will reform the banks and so on, nothing has really happened. I mean, even now one hears about delay in the appointment of chairman or the managing director. Sometimes the banks are without the head for quite a long time.
No, but even if they're appointed in time, is that reform enough? I mean,
no, that is not enough. I mean, I'm saying that the relationship between the government and the bank must be clearly spelled out. Then there are other issues which are not so fundamental, but also how much time should we give to the bank chairman as a tenure?
Okay.
I mean, is there a minimum tenure? I mean, there have been instances and cases of people having had only 1 year or even less than 1 year. It was said at one time, in terms of the criteria, there will be some cutoff in terms of the age. But it was followed in 1 year or so, and then the next year it was given up. Therefore, the reform of the way in which the banks are being run is extremely important.
Okay.
And
tenure is one.
Yeah.
What would be the other? Would you say that government stake should come down just below 50, say to 49, so that they can recruit laterally? Right now, I mean, State Bank of India chairman, the former chairman, was bemoaning she couldn't even go to the universities and recruit fresh people from management schools. So if you're brought under 50, then you don't have these problems. Also, you don't have the investigative agencies, the CVC, constantly asking for reports. Is that part of your reform plan at all?
Well, I think I will view the problem slightly differently. Yes, the facts that you presented constitute one angle to the approach of this problem. The other is somewhat related to the number of banks that the system should have. Basically, one can see that so long as the government has to have 51%, then the extent to which the capitalization of that bank can expand depends upon the ability of the fisc to contribute to that. I think, leaving aside ideology, purely from the point of view of the ability of the fisc to finance all these banks, to capitalize all these banks adequately, we should move away, first of all, from not having all the banks, keep some banks, others you let it go below 51%, and contribute whatever capital that you can do. I think that is one thing, but that's a purely pragmatic way of looking at the problem. Okay. The other is that the 51% rule does not necessarily mean that we have to do things in the way in which we are now doing. Okay. Now, the argument about the placement of people or recruitment of people is not bound by this.
It's a court order, sir. The court said that since you are part of the government, you have to recruit only through, national examinations. That
well, I think we really need to take it to a higher level of authority and say that you should give us the freedom to be able to manage our affairs. I mean, it cannot really be that everything should be followed in a particular way.
But even the investigative agencies say the same thing. Once you are 51% government, you are government. And therefore, you come under the CAG, you come under the CVC, which... Well,
I think the way CAG, CVG, the CVC and others look at the problem will also have to change. I mean, I don't think that the tail should not wag the dog. Okay. I think we really need to ensure...
That's easier said, isn't it, sir? I mean, they apply the law, and the law says that if you are 51% owned by the government, you're government.
No, that's the... I mean, I think we really need to take that issue up. I mean, really, what is government? Every institution of a particular nature should be treated as government. I think these things evolved over a period of time. I mean, let the highest authority in the country, legal authority in the country, take a view on this.
Okay. So aside from the tenure of chairman, what would be other reforms that you think are
I think urgent? We really need to look at the management by the board and so on and so forth. Is this the most satisfactory way of doing it?
Okay.
We
need independent boards, you would say.
Independent boards. And we also need how the boards function. Is there a way of improving the functioning of the banks, banks boards? Okay. People come, they are right on that day. Sometimes papers are presented only on the table. There's so many things are happening. Now, it's a purely management issue, question. Okay. And we really need to lay down all of these things, particularly when the ownership and the management are separated.
Okay.
We really need to do that.
Okay. So what about this ordinance that the government has brought, that promoters should not be allowed to buy back their the assets of those large NPAs which are now with the bankruptcy courts? Your thoughts on that?
Well, my immediate reaction is that it doesn't appear to be a wrong thing to do. I mean, because if a set of people have been responsible for getting the institution into a bad shape, into a bad situation, to enable the same to come back and bid through the route doesn't appear to be right. But I am told, and I read elsewhere also, that in other countries this is permitted. This is not, the promoters are not barred from doing it.
Okay.
But we are in a difficult situation. Please remember that all the actions that we are taking are putting a strain on the fisc also.
Yes.
Therefore, if there is a haircut, ultimately the burden falls on the fisc. At that particular time, it looks somewhat inconsistent to see that the very fellows who were responsible for running down the institution should be brought back because of a particular rule. I tend to view that the promoters...
No, I find that very repugnant. But to come back to this, to the question where I started, therefore, if India had had only private sector banks, then the haggling of how much haircut you give a promoter is between a private borrower and a private lender. It would not have become a fiscal question because the taxpayers' money was not involved. So I'm coming back to the same question. Was the problem from the start that, you know, we have too many public sector banks? If they were all private banks, then they would have been handled very differently, probably.
No, as I mentioned, the question of the number of public sector banks is an important issue. And perhaps every decision is also historically determined. I mean, I think we cannot get away from history. So we have had the nationalization, we have had the various other actions. Therefore, the step that we should adopt now is a step towards having a very limited number of public sector banks and creating conditions under which they will operate similar to the private sector banks. But reducing the number of public sector banks which we now have.
Okay. Well, thank you very much, Dr. Rangarajan. We do hope that the recapitalization will come with some seminal reforms. Thank you very much for joining us. Well, we just spoke with Dr. Rangarajan. I now have another doyen of central banking, Dr. Y.V. Reddy, former governor of the Reserve Bank, with me. Dr. Reddy, thank you very much for joining me, sir. Well, first I wanted to ask you on the state of the economy itself. We saw one GDP print coming better than the 5.7. We got a 6.3 print. From your anecdotal experience, you think that we are past the disruption of GST and DeMon? Things are stabilizing and we are almost normal now?
But there are two differences. One is disruption is not one day affair.
Yeah.
It continues. Then disruption gets reduced and the medium-term benefits start commencing. So that we should recognize. And I think the way I looked at it is roughly, in fact somebody asked me also, roughly the GST, given the nature of complications involved like GST, banking resolution also has to be done, and then we have this demonetization. It will take 2 years, that's my rough, for the maximum effect to cool down. Our 1 year is almost behind that, so it started looking up now. So as we move on, I presume that the gains will overtake the pain.
Okay.
So, but I think that distinct shift should happen 2 years from the events, and maybe 1 year from now.
Okay,
so,
it is 6 months actually.
No, it's not
July.
Not months.
Okay.
And it's
no,
not an event. There are so many things happen, and you're only expecting.
So 2019, you think we should be?
Yes, and by then we should also look at the basically how to increase the potential output.
Okay.
I think the real task for us is how to ensure, while this has to be sorted out, From a policy point of view, this is an implementation issue, let me put it this way.
Yes.
Implementation issue where you minimize the imperfections, maximize the opportunities. From the policy point of view, how to increase the investment in the country and how to increase the productivity in the country and make sure that it's consistent with the employment. And that, I think, is the biggest.
It's the bigger challenge. So over there, obviously, the most important, one of the more important issues will be the public sector bank reform. Now, both the governor of the Reserve Bank as well as the finance minister have said that recapitalization will come with reform. Now, how do you understand reform? What should be the most core of reform?
Okay. See, there are two ways of looking at reform. When you reform, you can do it incrementally or fundamentally. So we have been following incrementally. Basically what it means is public sector banks are not doing well, so I'll encourage private sector banks. Don't stop them, but I won't disturb them. Okay. Airlines, I'll allow the private airlines to come, but I won't disturb the Air India. But Air India also money is being incurred. You're putting in more money. And you're putting in more money in public sector banks. And their share is coming down. So it's one of the strangers of this, that where you're reducing the market share, you're incurring losses, and you're putting money, the taxpayers' money. So then if you ask this fundamental question, the answer is very clear.
That you have to privatize.
It's very clear. Unless you are able to prove that there are other benefits. What are the other benefits? Now the other benefit is social. First, even assuming that you are thinking of social objectives like local financing, easier access. Those are local area stuff. These are agriculture credit. Agriculture is a state subject. Agriculture is a state subject. Agriculture can become a state subject. So therefore, I was saying in the current context, if you answer to that question, and then what are we trying to do? What's the reform that we are talking about? Let's accept, assuming that the government of India and India is determined to reform fundamentally.
Yes.
What do you want to do? You consolidate, right? Be consolidate.
Yes.
So you consolidate so that you operate like HDFC, like ICICI, then where are you putting government money, people's money?
Okay.
So if at all you want to serve social purpose, then it should be smaller banks, local area banks. If you pursue this logic, then there is merit in, if the government of India is thinking consolidating and replicating private sector banks, my point is that doesn't make sense. Then as well government of India vacate. If the concentration is on social localized requirements, you can as well ask the state banks, each state government, use the modern technology, modern methods, and start new institutions. Okay. In fact, let me get it.
So you know, I told Dr. Rangarajan this just a little while.
I know. Let me explain two things. I was not only with Rangarajan, as recently as 6 months back, when this issue was raised, I said, over my dead body.
What, privatization?
No, over my dead body, giving bank licenses to state governments.
Oh.
Fundamentally, that has been my position. But now that there seems to be a strong political economic consensus for presence of the public sector banking in the country.
Yes.
If there is a and also I think people are not reacting against putting that money also. So I feel that there is a social and public sector governmental consensus to have some sort of presence of public sector banking. If that is the formulation, I would prefer it to be banks sponsored by state governments for two reasons. Ultimately, state governments are under the discipline of the central government. The new banks will have to be created under company law. Therefore, the dual control issue will not come up. Third, and in my most important is, there is no centralized risk. In other words, and
it's a diversified risk.
Therefore, some states may do well, as some states are doing. So then you will have Gujarat banking model,
okay,
Nagaland banking model, Kerala banking model. In Kerala, you have got a lot of deposits and local items limited. So I thought that in many countries they have got such localized banks. So at least we can have try a new dynamic, then persist with an old dynamic.
But that will have to be an altogether new bank. The current public sector banks which are run by the central government, you expect the best solution is privatizing?
No, as I said, but the way I look at it is if it is, and I sympathize with the argument that some amount of public sector presence in banking is important.
Okay.
So whether they will privatize all or have some, but some presence, even for government of India, maybe some presence is required. But my point is, if the purpose is social banking, such social banking can be done better at the state level in the new context. But if you are having, the point is, what I am saying is, whatever you are doing, definitely the best solution is not to have large public sector banks at national level doing exactly like HDFC and ICICI is not the best solution.
Okay, fair point. Well, let me come to another issue, and I will link it to public sector banks. The ordinance to the bankruptcy code doesn't allow promoters to buy back the companies unless they clear every penny of the loan or most of the loan. You think that's
I don't know. I think it's a way of, when there's some circumvention of law or something like that, I think.
No,
it's in some ways an extension to the principle of Benami. You have got one entity, you multi it up, you create another entity, the same person comes in. So it's in some ways prevents of misuse of the identity.
But you're in sympathy with that?
I don't know the details, and that's not my area of...
Okay. No, I'm asking you because there was one question which was raised by a financial expert who said that if India had only private sector banks, then if there was an NPA issue and a haircut issue, it would be between a private lender and a private borrower. Only because there is public money, taxpayer money that is used as capital, we have made this ordinance that the old promoter who is discredited shall not buy.
I don't know the detail, but I can understand the difference. The difference is in the case of a private sector bank, the bank directors sit down and said the fellow who was old owner is trying to buy the new one, so we won't accept the bid. They'll go to a different bid. But that will be arbitrary, but based on their own judgment.
Yes.
That will not be permitted in public sector bank.
Okay.
In a public sector bank, they are accountable, they'll go to court. So they will give reasons. When you try to give reasons, the problem is if the competency is different and he has got his own brother-in-law, then you got into problem of the... So you got information but not proof.
Okay.
So therefore, the public sector bank's processes are more difficult.
Required this ordinance?
No, I'm not saying required, but they may be an possible reason.
Okay.
Why if the other countries don't have, if we have, this may be the reason.
Okay.
But I'm only speculating. I'm as ignorant as you are.
Okay, sir, the other issue I wanted to ask you, and again, this is a law which only the text is available on the PRS website, of a financial resolution corporation that is going to be created. Now, this FRDI bill is making everyone anxious because it says that when a bank fails, the deposits of the bank also can be bailed in to bail out the bank, as it were, convert some of the deposits into share capital or maybe extend the tenure of the deposits. It is creating panic. Should people panic at all? After all, Government of India and Reserve Bank did not allow Global Trust Bank depositors to to lose. It did not allow Bank of Rajasthan depositors to lose. Should we panic about this bill?
If that is so, then why is bill? If the existing situation didn't raise a problem, I mean, I'm just, the counter can be, the existing situation is not creating a problem, then why are you having this law?
Okay.
I'm not...
They're trying to create a resolution corporation and maybe...
Because it is
superior.
The question that's being asked, I mean, I'm just...
okay.
I don't know. I don't know the detail.
Your counterfactual question.
Yeah, I don't know the detail, but normally there's a problem, then there's a solution.
Okay.
What you say is there's no problem, so what's your problem? I said, if there's no problem, what solution are you trying to give?
Okay. Well, okay.
So why are you trying to give me a solution when there's no problem?
All right. So basically you think people are justified in being...
I don't know, but definitely people are panicking, that I can tell you. Yeah. Any number of messages I got, and I'm again pleading ignorance because I don't know much about
Okay, okay. All right. Well, finally, sir, we have the public sector bank reform on the agenda. I don't know, this banks owned by state governments is not on the agenda at all. At the same time, Mr. Jaitley made it very clear that political opinion as yet doesn't support privatization of public sector banks.
What I'm trying to say is, let me explain. It is not privatization of the banking system in India. Privatization of the national public sector banks. And let me give you one simple example just to conclude. For computerization in India, there was a National Informatics Corporation.
Yes.
It was started. That services were provided to all state governments for free.
Okay.
The Andhra Pradesh government created its own corporation. called Andhra Pradesh Technology Services, and we said we will install our own computerization because we want to move faster than Government of India. And as you know, it became a model for use of. So therefore, you have to look at that way. If it's social objectives, if it's local, is there merit in doing that? So it's an experimentation, and I think. But as I told earlier, what is not on the agenda doesn't mean you should not do anything.
Okay. Point taken, sir. Dr. Reddy gives us a brave new thought. Probably for social purposes, state governments should be allowed to float their own banks. That must be the new avatar of public sector banking. Interesting idea, sir. I'm sure we will hear more about it in the days to come.